While 9 leaders were walking out of the Ethereum Foundation, while Bankless was selling every coin they owned, somebody else was moving in the opposite direction. Quietly, aggressively, at scale. 5.33 million ETH, $11.1 billion, 4.3% of every Ethereum that will ever exist, all held by one company, Tom Lee's BitMine. And they just bought 60,000 more worth $126 million while the price was sitting at the lowest levels of the year. So who's right? The scared money running for the exits or the smart money doubling down on the dip? I'm Tony. Welcome to part 2. Let's get into the data. Before we go further, everything on this channel is for educational and informational purposes only. This is not financial advice. Always do your own research before making any investment decisions. Let's run the good, the bad, and the ugly real fast. The good. BitMine now holds 5.33 million ETH, worth $11.1 billion, and is staking over 4.7 million of those coins, generating $289 million in annualized staking revenue. JPMorgan's JLTXX tokenized money market fund is live on the public Ethereum blockchain. And the Glamsterdam upgrade, the biggest Ethereum hard fork, since the merge is on track for a June mainnet target with DevNet 5 testing underway right now. The bad. Bitcoin and Ethereum ETF spot funds saw nearly $2.7 billion in combined outflows over 2 weeks. ETH ETFs specifically logged 10 consecutive days of outflows $216 million in a single week. The money is rotating out, just not out of crypto entirely, and ETH is still sitting 57% below its August 2025 all-time high. The ugly? The SEC indefinitely shelved its tokenized stocks framework on May 22nd. That was supposed to be one of Ethereum's biggest 2026 catalysts on-chain versions of Apple, Tesla, and Nvidia. Gone. No timeline. NYSE and NASDAQ pushed back hard, and institutional rotation is accelerating away from ETH toward XRP, Solana, and Hyperliquid. Let's talk about the most important institutional move in the ETH market right now. Because while retail sentiment has been collapsing, Tom Lee and BitMine have been buying every single dip, consistently at scale. The latest buy, 60,000 ETH pulled from BitGo, and Kraken confirmed on-chain by blockchain analytics firms On-Chain Lens and Ember CN. $126 million, executed over May 23rd and 24th when price was sitting below $2,100. Lee has said publicly that anything under $2,200 is an attractive entry point. He put his money where his mouth is. But here is the angle most people are completely missing. This isn't just a crypto trade. This is a Russell 1000 play, BitMine. Ticker BMNR on the New York Stock Exchange landed on the FTSE Russell Preliminary Inclusion List for the Russell 1000 Index. That's effective June 26, 2026. The Russell 1000 tracks $12.2 trillion in benchmarked assets. Passive index funds and ETFs that track the Russell 1000 may be forced to buy BMNR shares. That is indirect ETH exposure being injected directly into traditional retirement and institutional portfolios. Most people are not connecting that dot. And zooming out, Lee's long-term goal is owning 5% of all ETH in circulation. He calls it the alchemy of 5%. At 4.3% today, he's close. The next move, launching the Made in America Validator Network, or MyVan, a domestic ETH staking infrastructure play targeting hundreds of millions in annual yield. This is not a short-term bet. This is a thesis. Now let's look at where the institutional money is actually going. Because the story is not that institutions are leaving crypto. The story is that they are rotating within crypto. Over the 2-week period, ending May 25th, Bitcoin and Ethereum ETFs saw nearly $2.7 billion in combined net outflows. Ethereum ETFs hit 10 consecutive days of outflows, the worst streak since their launch with $216 million drained in 1 week. BlackRock's ETHA led the outflows at $184.59 million in 1 week alone. But look at where that money landed. XRP ETFs $60.5 million in weekly inflows. The Clarity Act narrative is real, and the XRP ETF launch momentum is pulling institutional dollars. Solana ETFs, 58.1 million in weekly inflows. DeFi dominance, payments infrastructure, DPIN. Solana's narrative is landing. Hype, hyperliquid, hitting new all-time highs. The DeFi exchange volume on hyperliquid is now rivaling some centralized exchanges. Institutions and DeFi native traders are both paying attention. The key insight here, institutional demand hasn't disappeared. It has rotated. BRN head of research. Timothy Messier said it directly, quote, institutional demand hasn't disappeared, it has rotated. End quote. That's not a crisis. That's a maturing market finding where the best risk-reward sits right now. The same week that the SEC killed a major catalyst, Wall Street doubled down on Ethereum. Let's do both. The SEC delay. On May 22nd, the SEC indefinitely shelved its innovation exemption for tokenized stocks. This framework would have allowed crypto platforms and DeFi protocols to offer on-chain versions of public company shares, 24/7 trading, fractional ownership, and rapid settlement. SEC Chair. Paul Atkins had literally said the agency was, quote, on the cusp of releasing an innovation exemption. Then NYSE and NASDAQ pushed back, raising concerns about investor protection and market fragmentation, specifically around third-party tokens issued without company consent. No new timeline has been given. For Ethereum specifically, this matters because tokenized real-world assets are overwhelmingly built on Ethereum rails, and this was supposed to be a massive 2026 catalyst. JPMorgan builds. Anyway, on May 13th, JPMorgan Asset Management launched JLTXX, its second tokenized money market fund, directly on the public Ethereum blockchain. This fund invests in short-term U.S. Treasuries and overnight repurchase agreements. Token balances are held on-chain. It is specifically engineered to meet reserve requirements for stablecoin issuers under the Genius Act. CEO Jamie Dimon wrote in his April letter to shareholders that JPMorgan must, quote, move faster on blockchain infrastructure. They are. The tokenized treasury market has now surpassed $14 billion. Ethereum holds 70% of that value. The SEC delayed the regulation, but the institution-level adoption is happening with or without it. Here's the story that I genuinely think is being the most underreported, given how significant it is. Ethereum has a hard fork coming, and it could be the most technically ambitious upgrade since the merge. It's called Glamsterdam. Tentative mainnet target, June 2026. DevNet 5 is testing right now, and this isn't a minor patch. This is a structural overhaul. Two headline Ethereum improvement proposals anchor this upgrade. EIP 7732, Enshrined Proposer Builder Separation, or EPBS. Right now, Ethereum's block production process relies on off-chain relay networks run by third parties. That creates centralization risk and MEV maximal extractable value abuse. EPBS moves all of this directly into the protocol. No more relay middlemen. Block building becomes transparent, on-chain, and fairer for everyone. Validators no longer depend on third-party infrastructure to do their jobs. EIP 7928, block-level access lists, or BALs. This is the path to 10,000 transactions per second. Right now, Ethereum processes transactions one at a time sequentially. BALs let non-conflicting transactions run in parallel simultaneously. The result, dramatically more throughput and a 78.6% reduction in gas fees. That's not a rounding error. That's a structural change in how cost-effective Ethereum is to use. The June target is aspirational, scope is large, and history shows Ethereum delays are possible. But the fact that DevNet 5 is live and the specifications are advanced suggests this cycle is on track. All right, you have the full picture across both parts of this series. Let me give you the clean takeaways. ETH is trading around $2,112 today. It topped out at $4,953 in August of 2025, and it's sitting 57% below that right now. Key support is 2,085 to 2,100, tested twice, held both times. Key resistance above is 2,400 to 2,600. Below, major liquidity sits between 1,700 and 1,900. Upcoming catalysts. Glamsterdam targeting June. Tom Lee said if ETH closes above 2,100 at the end of May, that would be the third consecutive monthly gain, which has never happened in a crypto bear market. He called that validation that, quote, crypto spring has arrived. BitMine's Russell 1000 inclusion is effective June 26th, and the Genius Act stablecoin law is already fueling tokenized fund launches on Ethereum as we speak. Key risks? The SEC tokenized stocks delay could drag into Q4. If the ETF outflow streak extends past 15 days, sentiment could turn significantly worse. Glamsterdam's June target is aspirational, the scope is large, and the EF governance vacuum remains unresolved. The bottom line, institutional rails are being built on Ethereum. JPMorgan is the proof. Smart money is accumulating BitMine, and Tom Lee are the proof. Glamsterdam is a genuine technological leap. The specs are the proof. Short term, things are messy. Long term, the thesis is intact. Position accordingly. I want to close part 2 with a verse that speaks directly to everything we've covered across both of these episodes. Proverbs 13, verse 11. Wealth gained hastily will dwindle, but whoever gathers little by little will increase it. That is exactly what Tom Lee is doing. Not chasing a pump, not gambling on a single entry, gathering little by little week after week because he believes the long-term thesis is unbreakable. Whether you agree with his conviction or not, the discipline of that approach is worth studying. As always, nothing on this channel is financial advice. This is for educational and informational purposes only. Please do your own research and consult a licensed financial advisor before making any investment decisions. If you want to start trading crypto, I personally use Kraken. The link to get started is in the description. And if you're ready to invest in stocks, SoFi Invest is giving you $25 free when you open an active investing account with $25 or more. That link is in the description too. If these 2 episodes gave you real value, hit the like button. Subscribe, and drop your ETH price target in the comments. Where do you think it ends 2026? I want to see your numbers. I'm Tony. See you in the next one. God bless you.